So variable costing is not consistent with generally accepted accounting principles. That means when a company is putting together its financial statements, for example, its income statement, it cannot prepare them using variable costing. The company has to use absorption costing. So then the question is, well, why would any company use variable costing if it could only be used for internal purposes? And the reason is that there are several very, very important advantages that come with using variable costing. And one of the advantages is, and this is actually the biggest difference between variable costing and absorption costing, is that when you use variable costing, operating profit for the company is not going to be affected by any changes in the inventory. So when I say changes in the inventory level, what do I mean? Basically, if a company were to produce, and I'm going to use data here from the examples that we did in the previous videos. If you haven't seen those, feel free to check them out. But we've got 3 years here, 2019, 2020, and 2021. And when a company produces more units than what it sells, if, for example, here in 2020, they produced 15,000 but only sell 10,000, in that case, there's going to be this fluctuation basically with absorption costing. You're going to be deferring some of the fixed manufacturing overhead to future periods. And so it's going to be kind of weird because look at this. Every period here, every 2019, 2020, 2021, the company sells 10,000 units. In every one of those 3 periods, the cost structure is identical. And yet, with absorption costing, we end up with a loss in 1 year, 40,000 profit in another year, and 60,000 loss in the 3rd year. But with variable costing, the operating profit is the same. It's actually a loss here, $10,000 loss every period, but it's identical because we sold the same number of units every period. The cost structure has not changed. So really, the only reason that the profit is changing, is fluctuating here for absorption costing, is because there's changes in the inventory level. We end up with 5,000 units of ending inventory in the 2nd period, and then we end up with 0 in the 3rd period. And so that fluctuation in the inventory level is actually causing changes in the operating profit. Whereas with variable costing, it's really simple because we expense with variable costing the fixed manufacturing overhead every period. We treat it as a period cost. And so changes in the inventory level aren't going to have any effect on the operating profit level for variable costing. Okay, which makes it really simple, and is another advantage to variable costing, which is basically if you sell more units, you're going to make more money. With absorption costing, I mean, take a look at what absorption costing. We sell the same amount of units in 2019 and 2020, but think about it from a manager's perspective. They see under absorption costing that the profit went up by $50,000 from year to year. So that might be confusing of, hey, it seems like the company got more profitable when really all it did was produce more than it sold in the 2nd period. With variable costing, we don't have that. The only way to increase the operating profit under variable costing is to sell more units. And so another nice thing about variable costing, when you actually, if you do put together an income statement, and again, this isn't GAAP, you can't put together your external financial statements using this, but let's say for internal purposes, you put together an income statement, you already have all the information you need to conduct cost volume profit analysis. If you don't know what CVP is, think about break-even analysis, and we can try and determine how many units does a company have to sell in order to break even. And to do that, we need to figure out our contribution margin, then our contribution margin per unit, or we can do our contribution margin ratio. And I've got other videos on that if you don't know what that is. But basically, this information here, breaking it out by variable expenses and then fixed expenses, we can use that to calculate how many units a company, or how many sales dollars a company needs in order to break even. So we have basically all the tools we need for cost, volume, profit, and break even analysis with a variable costing income statement. With absorption costing income statement, it's not the case, because absorption costing would just have the fixed manufacturing overhead would just be buried in with a cost of goods sold, and so there'd be a fixed and variable component of manufacturing overhead in the cost of goods sold, and then some in inventory and so forth. Okay, so that's one of the issues. Now, operating profit, when you use variable costing, another advantage is, and this is a company, for example, is having trouble with cash flow. If they're having some problems with cash flow or they're worried about running out of money, when you use variable costing, basically your operating profit is going to more closely approximate the actual cash flows of the company than it would if you would use absorption costing. And here's why. If you think about it, remember the whole key difference between absorption costing and variable costing is with absorption costing, so when you produce more than you sell, you're going to be deferring some of the fixed manufacturing overhead. Some of that is going to be pushed to a future period, right? And so basically you're having these are real expenses, right? Fixed manufacturing overhead. Let's say there's some, I don't know, real estate property taxes for the factory or something, right? Those are real costs that need to be paid. And so when you use absorption costing, you're basically pushing those to a future period, right? Or you do the reverse. If you have where you actually sell more than you produce, then it actually you're taking more expense than this 150. Okay. Now we've talked about that in the previous videos. I don't want to get in too deep, but the main idea is that when we're looking at this operating profit figure, okay, for when it's computed according to variable costing, this is going to more closely approximate the actual cash flow than is under absorption costing.